What's going on, traders? It is Antoine Farrar back with another trading video with Digital Goatz Academy. Now, normally today would have been my live trading segment, but I actually woke up kind of late. But because how the market has been reacting, I did want to do a video discussing on the directional bias. I know I just pushed out a video yesterday or today discussing like buyers in the market, which we were looking at those initially, but it looks like between indices, the market is actually pushing down and playing off of our original bias for the beginning of this year, where we are expecting the market to actually push back down in order for us to have a better buying opportunity. Now, I want to break down like the three indices, and I'm gonna discuss like cryptocurrency as well, because with us talking about that, we said that okay, well, if indices are buying up, then we should expect what? The same thing from cryptocurrency, right? Because they've kind of been working in tandem with each other or kind of following or trailing behind one another. So if Nasdaq has been bullish, we've been seeing cryptocurrency be bullish. But we'll still have to see like with cryptocurrency, like I don't want to go too deep into it because again, there's not a lot of economic data pertaining to cryptocurrency because it's so new. So, what I think may happen in correlation with technicals, that may not be the end result. But let's just discuss indices real quick. So let me go ahead and scale down on the hour time frame. And I want to discuss what happened with US 30. And then, like I said, I'm going to go through the other indices. So one thing I use for myself as a trader, like I have parameters, I have things that I set in place that tell me if I'm in the right direction or if I'm in the wrong direction. Hopefully, I can spot it early before the market beats me up. You know what I'm saying? But I think a lot of traders don't have a way to tell themselves are they in the right direction or in the wrong direction in the market. So I kind of knew from yesterday, I expected like a retracement. I did expect some type of retracement, but I thought it was going to be shallow because I thought this move was going to carry us up as far as like being with buyers. I thought this move was going to carry us up back all the way up to 50K. And if we were going to sell, I was expecting us to at least reach 50K again before the market started considering to sell. That didn't happen, which is still a good sign because at the same junction is that because the way the market is reacting, to me, this is just a giant correction phase, which means we don't have to really stress over is this like a true bear market where like we expect the market to come down extremely violent. So I know that, Trump is supposed to be imposing some more tariffs, especially with the global tariffs that he's doing, well, that he's trying to do, that's 10%. I don't think that that's going to be like induced into the market where it'll create a reaction like we saw last year. Last year, the sell was fucking crazy. You know what I'm saying? I think the sell is going to be monstrous, but not in a way like how it was with tariffs being implemented into the market. So for me, seeing this, to me, this is a good sign that the market is saying that, yo, we're correcting ourselves in order to buy back up. So, as far as like what we were looking at, is this a bull market? Absolutely. Are we in a bull market right now? No, we're not. So, let me just talk about some of the things that I noticed when the market was creating more data. One, if we just look like where we came from, when the market started selling off. So, this was the beginning of February. We first created that bear trend, which we couldn't really tell. But at this point, I think we kind of knew that the market was pushing down a little bit lower. We just didn't know where the buy zone was at. I had plenty parameters set where I believed that the market was creating buy zones, and it was just false. But each time the market was creating more data, it was telling me like what was going on. So, for example, today or between like last night. So yesterday, when the market was done being bullish, what did it do? It started consolidating, and what I did was trap prices to see how the market will react. It gapped down, yeah, it gapped down as the market opened up, got bullish, then brought the market back down, going into London. So this is like from Sydney into London. So we can see that at this point, London. This wasn't exactly London, was it? So yeah, 3 a.m. The 3 a.m. candle was a bear candle, and then the following candle, so the following hour candle, so at 4 a.m., that's where we got bullish, right? So look where we got bullish at. And again, this is why I urge traders to keep their parameters up or keep their markups up, so that way it can kind of tell you the story. You know what I'm saying? Like, and again, like I got caught with my pants down, I'll be honest, but I saw this stuff. I just didn't pull the trigger the right way, right? So where did price test all the way back up into? One, this is the 945 candle. That's something that we at Digital Goats Academy use when it is relevant. Not all the time is it relevant for us to be using the 945 candle, but it holds some significance and you can use it as a zone to see how the market is reacting. And we did do that. We extended for this entire week. So this is the 945 candle from Monday. And again, this could have been any day like that I identified the 945 candle just to see how the market is reacting. But you can see between like Monday, it was no clear sign. So even with this information, it didn't show me like enough data that I wanted to see for a clear directional bias, right? But as the market is creating more data and definitely creating these falsehoods and manipulation tactics, it is still giving you data you need to be like, damn, that was a bear move the whole time, or that was a bull move the whole time. We've basically been testing within this gap, and what the gap that opened up during Sunday. So this was Sunday, and we've basically been testing in this gap zone. For me, the market cannot stay below the gap. So at this point, once the market stayed like below the gap, that's your first sign. So even if I wasn't looking at all this information, just knowing that the market gapped down on Sunday and it stayed below that, and we're about to head to Friday, yeah, that's kind of telling me that bears are in the market, at least for this week, going into next week. But like again, we start from where we're at and we retrace back. This was a price trap that I did that the market broke out of and tested back into that zone. So if you extended the price trap, you can see that, oh shit. All it did was break out of this consolidation and test back into it, confirming that at least at this point that there's a possibility of a bear market once we saw like more data, right? So maybe you didn't know that this was selling off. Same thing with me. Like I couldn't really identify the sell at this point. But another parameter that we set is what? The 940, I mean the opening bell candle, right? This is the philosophy that we go by in digital goats. If it immediately gets, and again, it just depends on like it does depend on the trend, like how the market is moving and stuff. So you obviously want to identify the overall trend, but when the market gets bullish immediately at opening bell, then it's probably coming down. You know what I'm saying? And I can show you where it did that at during opening bell. If the market gets bearish immediately at opening bell, it's probably buying back up. So you just have to pay attention to that. And then this is why we don't jump into opening bell like immediately and we kind of wait for a little bit more data, right? So if I break down opening bell to like a 15 minute candle, it shows a better depiction because this is where price got dumb bullish, right? Got dumb bullish immediately. Well, I wouldn't say dumb bullish. Got bullish at opening bell. I kind of was like hesitant towards it, but then the following candle, the 945 candle, got bullish. One thing that I needed to see is that if this was gonna continue being bullish, we needed price to break above this area up here. Yeah, we needed price to break above this area, and the following candle needed to be a bull candle. That wasn't the case. So even though I wasn't able to spot it up here, which I did kind of scratch my head to that, at this point I knew that this was a bear market, right? Because opening bell brought us up, and that normally ends up bringing us down overall. One thing that I do also look into is that look where we're at. Look where we're at in orientation to the 945 candle. 945 candle did what? We've tested back into the zone, but we've closed below it. If anything, opening bell brought us the closest back to the 945 candle and then sold off from there. So at this point, like, we're pushing lower at least to establish what some type of support or resistance. So maybe the market is trying to buy up from here. But when I look at the long game, just from what the market has been showing us, unless like tomorrow does something crazy, I think that we're pushing down to these original levels that we've been discussing at the beginning of the year, where we were looking for US 30 to come back to 45K. We were looking for S&P to come back to like, I think 6,700 or something like that. I don't know where we were looking for NASDAQ, but what I'm looking for is for price to come back to these levels over here. This is a previous high that the market broke out of last year. And this is what I was looking for initially for the market to actually come back to this area in order to test it and then continue the market running up. You know what I'm saying? Continue the bull trend. So the fact that we finally got this cool off is what I was looking for initially. I think that bears are in the market, and what we're going to do is we're going to continue to sell off while still trying to fuck people over by creating these visuals that buyers are in the market. I don't think we'll see buyers until we get somewhere down here, and this kind of goes into what I was saying that I want to see the market fill this gap. So I want to see the market push lower than this gap and then buy back up, which would put us around the 44K. I doubt that we'll see 43K. But again, unless Trump starts talking more about tariffs, then yeah, we could definitely see that. But I think that this is what's going on now. What's crazy is that one of the members in our community actually identified, they said that they believe that this was a head and shoulder pattern. And as you can see, it is playing out as a head and shoulder pattern. But I'm not expecting the sell to be as aggressive as it was last year. Like the move was very aggressive. So if anything, like I said, either this high or a test back into this gap right here, which we may not get 45K flat, but I am looking for at least a 45K area because that'll put us back close to the high of where we broke out last year. And then we can start looking for buy opportunities from there. But yeah, like I said, I think this is the clear picture on what the market is trying to show us. The only thing is like how it's going to react from here. I could see it testing back into these zones, but like, yeah, I'm pretty confident that we're pushing down further than until we get to a support structure. And then, once the market comes back up here, ignore all this as far as like selling opportunities. So once we do establish some type of support structure, like I said, I don't think this is reliable. I think the market's going to blow through that. I think it's going to find like a major level of support where it's been creating support like on a higher time frame. So basically what we saw with like this was pretty much our first level of support. So wherever the dip is at. So will price come back down here? More than likely, it'll probably come back down to this dip because this was the last major dip we had before the market actually started buying up and, kind of swaying people's opinions by creating all this confusion and noise. But I think now the market has flipped and we're going to do a 100% return on this side. Um, I'm hoping we get there sooner because we are heading into Q3. So if we do get this pushed down, because this kind of looks exactly, it's not looking exactly like what we saw from the market last year as far as like how it sold off, but the time frame it sold off. Look where US 30 sold off from last year, February 6th, and that was the trend. And then what did we have? All the way up until February. Well, all the way until what? April. All the way until April, and that's probably what we'll see again. So, it looks like that March is a bear month as well, and we'll probably see this entire month sell off. And then going into April, we'll probably still get a little bit of bearish activity, and then the market will try to establish some type of like structure to buy back up. Like, let me see. Yeah, there's no way, like, for this stuff, like, even last year when we identified it, I had an idea that we might come back down here, but I really didn't think that we would hit like 36K, you know what I'm saying? So, if we do hit like 45K, there's a possibility the market could go lower. So if it does go to like 40K flat, like there's no way I was able to see that. But again, like as far as like bears being in the market now, yeah, I think it's a pretty clear picture. And like I said, our first our first point of contact would be where it broke out of, which is 45K 45, basically. So that's what I'm looking at for US 30. Now the NASDAQ. Same thing with the NASDAQ. I don't trade the NASDAQ. I probably should start trading the NASDAQ because to be honest, I've kind of been on point with like how I've been viewing my analysis, right? So if we just look at where the NASDAQ I think we had already saw, yeah. So the Nasdaq, yeah, that was another thing too, that we're below Jolt's data. So even though I was only focused on this information up here, look, we're below all this information and the trend is continuing down. You know what I'm saying? Like it hasn't like shown every time it's got brought back up, it sold off. So it's like to me, that's a clear picture. Same thing over here. We're below this JOLTS data. The reason why I even identified JOLTS data, that was the first JOLTS data that we had of the year, which that was like the next significant news that we Oh, that was the next significant news that we had being pushed out to us. So I wanted to identify that because I was trying to determine how the market was going to react based off of these moves. And as you can see now that we have the data, price has been continuing the bear market. So I know I've been trying to create these buys where I thought that the market was going to, and to be honest, the market has bought up from these levels, but this wasn't the overall direction. So now establishing like how the market reacted, I can clearly see that, we're in a bear market and the market's going to continue pushing down until we find some stronger level of support. So just to discuss this, one, we have a gap that, I annotated. The market tested this gap and then ran away from it. But on top of that, even if we didn't know that there was a gap up here or a major gap that the market could test, look where it's at. I mean, look what it created. We identified what? The 945 candle. So let me back this up real quick. So you see the 945 candle, that is for February 11th, I think. And all I did was extend it because I want to see how many times price is going to play into these zones because clearly it does hold some weight, and you see how the market has, created itself, right? Well, created the data. So this was the 945 candle from February 11th. We sold off, and before the end of the trading day, the market actually started buying back up. Then it sold off again around it continued selling slightly, only for like a short pullback in order to buy back up to do what? Create resistance. So we bought up from 7 o'clock all the way until the next New York trading day. So at the open of New York, it closed bullish, but then at the open of the 9 a.m. candle, the market got bearish. And I'm sure because we're on the hour, we have to break it down a little bit lower because we have to factor what into this. We have to factor that opening bell was the reason that the market got brought down, right? So we can see that 8:45 we were bearish, 9 a.m. we were bearish, 9:15, and then opening bell. Look what opening bell did. Again, pay attention to this, traders. I can't stress this enough. Look what opening bell did. Got bullish immediately. We have to break it down so you can kind of see where we at. This isn't it. Yeah, I had to break it down to a 10 minute, my bad. But so look what opening bell did. You can see it on the 10-minute time frame. Right here, opening bell. Got bullish immediately and sold off. Then pretty much had the 940 candle tell you, hey, I'm bearish. Push the market down. The following candle definitely brought the market down and then it tested, which we should expect a small test around 10 a.m. and then continued the market selling until we did what? Until the market sold off completely. So this is where the market sold off and then it got bullish again. This is very chaotic, yo. So I did say that if the market, pushes back up here, what we should expect is like the market to sell off. And as you can see, when it pushed up, it pushed past the zone. Again, it's recognizing that a lot of traders see this. This is another gap that got triggered what? Post market. So after we had the closing bell at 5 o'clock, the market closed up here, closed high, and then it gapped down. And then what did we do? We tested it and we basically did the same thing we saw happen the last time the market sold off, right? We saw it basically close low and then by the end of the trading day, well, no, I didn't do that by the end of the trading day. So, well, basically going into going into yeah, going into the next New York trading day, the market bought back up. So even though it sold off at post market, it bought back up basically around the same time. Well, an hour later and stuff. So this was 6 and this was 8. This was 8:30. So the market bought up from 8:30, right? Anyway. Yeah, the market bought up from 8:30, and then we sold off again, right? So we sold off from again at February 26th. And then I identified another 945 candle. Look, we're below this 945 candle, and then look at this 945 candle. So with this one, it brought the market down very aggressive, like sharply. But again, it still played around, and then it looped us around back up here again. You know what I'm saying? So now we're back up at the 945 candle, and as you can see, well, the zone that created the 945 candle, and as you can see, look what the market did today. Well, this week. So we've been playing in this territory, sold off. I expected like a reaction like that. This is where the market got bullish around opening, I mean not opening bell, around the London session, and then we sold off again from there. And we've been playing the sell um based off of this 945 area. And you can see that I identified uh inverted head and shoulder, but I no longer think that that's valid. For me, if it's going to remain an inverted head and shoulder, it still needs to it can't like try to push back into this territory. So we could see the same thing with like US 30 and S&P. I don't know why I'm losing my train of thought, but US 30 and S&P, but they violated what I believe to have been inverted head and shoulders. So for me, the market has to like push higher and not do this number right here for me to respect like the pattern of a inverted head and shoulders. So at this point, I don't think that this is a bull market anymore. I think that this is a bear market. I identified this 945 candle as well today. You can see that price sold off from there. You see that we sold off from there, and currently it looks like price is just testing this zone or probably testing, well, yeah, testing this candle. We'll just have to see. Nasdaq is a little bit more aggressive from what I've seen lately. But yeah, I think this is clear signs that bears are in the market. Like I said, I can't see the market like for me, if like it's gonna respect the inverted head and shoulder, it can't like loop around like this. Like the movement has to be like smooth and it has to continue that trend. But like I said, we'll still see, but I don't think that the market is like gonna be trying to test these zones. I know one of my other members in my community was saying that she believes that the market's gonna test today's high again. I strongly doubt that, but we'll see. You know what I'm saying? I definitely have been wrong in the past. But I think this is definitely building the bearish momentum it needs, especially since we've been hanging out at this resistance zone in order to bring the market back down. If we're going to respect inverted head and shoulder or a head and shoulder pattern, I think the market needs to run away from it smooth. Maybe like with this pullback, it should have broken through, but the fact that we've started playing around, it's like I'm not, being enticed that, oh, well, it's building or accumulating enough orders to buy back up. Because we do have this gap over here. I could validate that, oh, well, it's probably buying up from this gap, but nah, because again, I'm looking at indices like in tandem with one another. They gotta move not in sync, but alike. If S&P is selling, then NASDAQ should be selling, US 30 should be selling. They should all be, as far as like the trend, doing the same thing and stuff. So I don't see NASDAQ like popping up just based off of what we saw today. Well, this week alone and going into, well, yesterday was a pretty good day, but after the market started like getting chopped, well, Tuesday, and it started getting choppy from here, yeah, I'm like, this thing is probably like coming down and especially a little bit lower. So I expect it to violate this pattern and I expect the market to be lower than 24,300 or equal to it, either 24,300 or equal to it. And last but not least, well, I wouldn't say last because we're going to touch on cryptocurrency real quick. Same thing with S&P. So if I scale back out, again, I started looking at it and I was like, man, this market is definitely showing signs that this is a bear market. So remember, this was our original buy zone and price did buy up from there after we had this move. So we were buying up from here. Price was, showing us bulls in the market. And at this point, one thing that I said is that can't happen. I needed price to break this gap up here. Price decided to create resistance at this gap. So that definitely made me pump my brakes and be like, yo, what's probably happening is that the market is probably actually coming back down a lot lower than um, what we initially expected, but again, got played with. And that's gonna happen. I mean, you can't get away from that. That shit is gonna happen. Like, so if you think you're gonna be a perfect trader, you just gotta have rules and discipline because the market's gonna make you change your bias, which is like okay, because even when we were changing our bias, the market did buy up. You know what I'm saying? Like it did present opportunities for traders to cash out on some income, right? But it's created resistance up here. As you can see, the market sold off. Well, one, we created a gap. We gapped down. So this was Sunday. I probably need to make this a little bit bigger. This is a representation of Sunday. We gapped down. Market tested that gap, sold off, bought back up again, then sold off Monday. And then Tuesday is what actually brought us up back to this gap. So between Wednesday and yesterday is where the market pretty much told us, yo, I'm no longer trying to buy back up. Because for me, like I said, I needed it to break this resistance. I mean, this gap up here, which is I am treating it as resistance, but I needed a candle to close above. The fact that the market tested basically the area that it sold off from yesterday. So this was what was this? Oh, so this happened at 10, I mean at 8 o'clock. So this happened at 8. And as you can see, it's very similar to what we saw with US 30 when we price trap. It just tested that area again. So it tested that area at 4 a.m., slowly brought the market down. Look what opening bell did. I'll break it down to a 15 minute so you can see. Look what opening bell did. Opening bell got bullish, brought the next 9:45 candle, and we sold off from there at 10 a.m. So 10 a.m. is basically, even if we were uncertain, 10 a.m. is what actually brought us down. So yeah, like I think bears are in the market until we hit, let me see for S&P. S&P, I needed to hit this level. So I am looking for S&P 65. Yeah, probably like 64. Probably like 6,400. That might be a stretch. Let's do 65 flat right now and then see how the market reacts. I don't want to overshoot anything, but yeah, I think that S&P is possibly coming back down to 6,500 flat. And then we might have some opportunity for bulls in the market. Now, there is something that I do want to highlight too, is one thing that I paid attention to because how close we are to the beginning of this month is the monthly candle. So the monthly candle, it opened up bearish and then it got bullish. I expected it to get bullish. The reason why I expected it to get bullish is I don't have any I'm hiding my markups because I want to show something real quick. The reason why um like I expected it to get bullish is because it gapped down. So you saw like the market, that gap that we had that opened up, that brought the market down for like the new month. You know what I'm saying? So we're in a new monthly candle and the market initially gapped down. Well, since it gapped down, there was a lot of liquidity left, a lot of liquidity left over. And I expected the market to want to test that area. So if we just cut this in half, like this candle, even if we just worry about the body, even though this is like a doji or some form of consolidation, we can see that if this was 50%, did price test back into this area? 50%. If we just look at this as half of this candle being 50%, yeah, a little bit above that. That might even have been 618 or close to it, right? So the fact that the market got bullish and we saw, a bull candle yesterday and the market started pushing down, I'm thinking that's showing signs that we tested this side, that we tested this candle in order to grab the liquidity that was left over and then bring bears in this market. So don't be surprised if this monthly candle starts turning red. That's what I'm expecting. So the same thing with the Nasdaq. That's what I'm expecting. Same thing with US 30. The US 30 is already bearish. So that's definitely what I'm expecting. But I was waiting on I'm expecting the Nasdaq and S&P to eventually get bullish. I mean to get bearish, and that'll actually bring us down to a adequate level that we need for the market to buy back up. Yeah. So I don't know where NASDAQ would end up landing. I mean, maybe back to 21. Where do we come from? Okay, yeah, yeah, yeah. So like 22K, 22K, 21K. That's all I'm expecting once the market, hashes itself out. So yeah. Yeah, that's what I'm looking at. Same thing with well, last but not least, when it comes to cryptocurrency, same thing too. Like at this point, I think that Bitcoin and a lot of its brothers and sisters attached to it. I think this was just false hope to bring the market back down. I had touched on this the beginning of this year, but again, the market has been so inconsistent with its depiction. It's been hard to kind of say, yes, this is the direction. I did already mention that we were in a bear market, but I was believing that the market was going to push us back up here. But after seeing how indices reacted today, I think that cryptocurrency is coming down a lot farther. Which again, I said this is still a good opportunity for people that weren't investing in cryptocurrency before or were skeptical of it or took a major loss. You definitely want prices super low. You know what I'm saying? Not where it it loses its value as far as like is cryptocurrency reliable, but as far as like Bitcoin, like yeah, I did say that I believe that price could come back down to 24K with our first stop being 65K. We reached that already. So I would have to believe that if the market is being brought down overall, then our next stop after that would be what? 50K. So our next stop is 50K with the lowest that I think that we could travel within cryptocurrency is back to like 24, 31K. So anywhere from 24K to 31K. Will it hit that? To be honest, I hope so, but the way it's looking, I doubt it. Just looks like a pullback now in order to continue the trend. But once we have like another sharp push down, we might get the opportunity that we were looking for to buy back up. But like I said, my next pit stop would be 50K. Anything lower than that, I couldn't have foreseen it besides like my expectations on believing that this market could come back down to like 24K. And the only reason for that is because if you just put a fib to where the market was bullish before, you can see that, and again, this is the only information I can rely on. You can see that Bitcoin from, what was this? 4,000 went up to 69K and then basically came back 90% of that move. So what I was expecting is for something similar to happen within Bitcoin because the fact that the market got bearish from 25, well, 26K, and we got bullish all the way from, what was this, 15, 14? This is exactly the area that I was looking to buy at that a lot of me and my community members got in at, but we ended up selling off because we thought price was coming back down here. So if we look at the like 88K, like this lines up, like 30K lines up with 88K slightly. Um, yeah, so there's a possibility, like I said, there's a possibility that the market could come down back to these lower levels. So that's what I'm playing off of. We have weekly review coming up Sunday. So if anything changes, like as the market, what I'll probably do is I'll probably wait to do, well, no, I can still do weekly review. Um, yeah, it doesn't matter. It doesn't matter about me doing weekly review because whatever happens, like I'm gonna be able to adjust once we do market forecast. But yeah, so from here on out, I'm looking at bears in the market until we hit another support structure. I know the market has kind of been chaotic, but when you go out to the higher time frame, that's what it's showing you. It's showing you that I want to sell off. So we're going to treat it as such. We're still looking at this as an entirely bull market, but we just know that the market has to correct itself, which it's finally fucking doing. And then we'll make sense of what's going on once we get a little bit more clarity, like after the market starts showing signs that it's buying back up at the support structures that we already had mapped out. But I hope everybody had a good trading week. You know what I'm saying? Like, I think it's been pretty consistent. You know, we had a lot of opportunities. It's just that I know you're surprised. I'm surprised how like aggressive this market is, where it'll give out a 10,000 plus pips and then come back and take all that on the opposite side. So just make sure you pay attention to those type of moves and then you're trading at the appropriate time. That normally lessens the setbacks that you'll have as a trader. But I'm Antoine Farrar as always. I'll catch y'all in the next video with Digital Goats Academy. And again, just make sure you pay attention to this market so that way everybody can have a pretty good trading year. And again, it's still early, so we still have time. And this is the information that we wanted to see to definitely put us in the right direction. But I'll see you on the next video. Peace.